Lots of investors love using the EPS or earnings per share, as well as PE or price to earnings ratio, to determine how well a company is doing, whether they should invest or sell, and so on. The earnings per share simply tell us how profitable a company is, and we calculate the EPS by dividing the net income, or let's say profits of a company, by the number of outstanding shares. While the formula can be tweaked, think of the most straightforward one as simply EPS equals net income divided by number of shares. Moving on, we can also use the earnings per share to calculate the famous PE ratio of a company, and we do so by dividing the current share price by the earnings per share. Think of it as PE equals share price divided by EPS. Once again, this is a simplified formula which can of course be tweaked. Value investors love the PE ratio, and it's generally speaking a very popular metric. Whether you use it to identify undervalued stocks by comparing individual PE ratios to, let's say, the industry average, or use PE ratios to look at the entire market and determine whether or not investors are being overly optimistic, it's most definitely a tool worth having in your arsenal, and the same can be said about the EPS.